Hello all, and welcome to the first webinar of the Financial History Network 2022-2023 webinar series. Today we welcome Enrique Jorge Sotelo, who will be presenting his paper Politicians, Bankers, and the Great Depression, the Spanish Banking Crisis of 1931. Enrique is a postdoctoral researcher at the Department of Economic History Institutions at the Universitat de Barcelona. He obtained his PhD in economic history from the London School of Economics. His research focuses on monetary and financial history with an emphasis on financial crisis, central banking, and the implementation of monetary policy. He's also interested in the political economy of financial development and financial crisis. So Enrique will have 30 minutes to present his paper, which was pre-circulated in advance, and then we're going to have 30 more minutes for Q&A. You can post your questions in the chat. I can read them out loud to Enrique, or you can raise your hands and pose your questions yourself. So thank you, Enrique, and welcome.
Thank you very much. Thanks for the accepting the paper, and thank you everybody for joining. So this paper is trying to reassess the causes of bank failures in Spain during 1931, and particularly looking at the role that politician-banker coalitions play in this crisis, as well as the role of the Great Depression. So I will briefly motivate and show you what is the related literature. Then I will explain what is the new evidence and my contribution. And then I will explain the rationale, the fragility, and the consequences of these coalitions between politicians and bankers. And then I will show you one instance, the most important instance of moral hazard, insider lending, and the role of the Great Depression in pushing these banks under. So the main idea for this paper comes from this literature, essentially summarized in Calomiris and Haber approach to explaining banking crisis by the joint forces of politician-banker coalitions, right? So according to this framework, because banks need a charter in order to bank, banks form coalitions with politicians and form coalitions with depositors and shareholders, and the dynamics of these coalitions are able to explain financial crisis in history, right? So one of the important things in this literature is that the institutional design and the political regime matters, because basically in a dictatorship or in authoritarian regimes, these coalitions are going to be unstable and are going to be risky, essentially because the end of a dictatorship, for example, might involve the expropriation of bank charters, right? So because of this, politicians are going to have to pay or to attach higher rents in per capita terms to members of this coalition, which is going to mean that coalitions are going to be very narrow. So you are going to expect very few banks involved in these coalitions instead of wide coalitions. This game of bank bargains, as Calomiris and Haber presented, is expected to result in banking fragility, right? And this is essentially through two important channels. One is credit misallocation, which is essentially the product of insider lending, right? Of course, there are counter arguments to these, like for example this paper by Maurer and Haber, in which they argue it's not necessarily that the coalitions are conducive to looting, as they argue, but it's that it's the monitoring system that matters, right? Sometimes you might have coalitions that emerge, that there's a rationale for their emergence, right? But it's the monitoring and the governance of these coalitions that leads to financial instability. In any case, we see lots of this going on in universal banking history, and particularly during the interwar period in a number of countries in Europe. So in a sense, my paper joins this literature that is available for other countries. A second channel of bank fragility is moral hazard, right? So because these banks are connected with politicians or form coalitions with politicians, they are going to be more prone, or they are going to count on safety network, right? Safety net provided by either incumbent politicians or by specifically designed lending of last resort facilities, right? So speaking about lender of last resort, then there comes the second motivation for this paper, which is, of course, the connection between moral hazard and lending of last resort, right? This moral hazard is, as we know, is one of the key shortcomings of providing banks with insurance. This has been discussed in the historical literature for a long time. But then there is one specific idea that interests me in this paper, which is the idea of constructive ambiguity, right? This is a system by which you create a deliberately uncertain lending of last resort facility, basically because you count on the assumption that if banks know that they will be provided with liquidity assistance, they might engage in risky behavior, right? So you create this deliberately uncertain lending of last resort framework in order to make sure that banks do not rely on the idea that they will be provided emergency liquidity by central banks, and therefore you are able to reduce moral hazard, right? Of course, this idea has been shown to have shortcomings. The most important one is that if this implies uncertainty, and uncertainty during a financial crisis is not necessarily a good idea. So essentially, this constructive ambiguity can become destructive ambiguity. This is an argument by Vinogradov, a recent paper. And then there is another a way of dealing with this, which is essentially establishing minimum conditions. So this is what Caballero and Krishnamurti argue, that in order to manage constructive ambiguity without turning this into destructive ambiguity, what you can do is to set a minimum conditions for lending of last resort that banks can rely on, and then they can decide to which extent they depart from these minimum conditions. So with these two big ideas in mind, then I go and bring about new evidence to discuss the Spanish banking crisis of 1931. So for those that are not familiar with the Spanish history, essentially during this period we have first of all 1923 until January 1930 we have a Primo de Rivera dictatorship. From January 1930 until April 1931, we have what's called a dicta blanda, or you can say soft dictatorship. This is an interim regime that was expected to bring about democracy eventually, but then democracy comes in April 1931 through the proclamation of the Second Spanish Republic that lasts until the outbreak of the Civil War in 1936, right? What is important about this is that it's the end of the dictatorship, because it's going to condition the survival of these coalitions between bankers and the dictator. But it's also important to note that 1931 political transition, so that is the coming of the Spanish Republic, is accompanied by a financial crisis, right? So there are banking and exchange rate problems, there are stock market problems, and these stock market problems have an impact also in the banking system. So these factors here are affecting all banks, right? But not all banks are failing. So the question here, the research question I'm interested here is what caused banks to fail, right? So which banks did fail? On 7 July 1931, Banco de Cataluña, Banco de Reus, and Banco de Tortosa failed. They suspended payments. So because Banco de Reus and Banco de Tortosa are just subsidiaries of Banco de Cataluña, and whatever happened to Banco de Cataluña also happens to them, the paper is only focused on Banco de Cataluña. Right? Why is this crisis important? So Catalonia is 20% of Spanish GDP at the time, and is the most outward-oriented region, right? So it's a very specific type of region within the whole of Spain in this sense. And the failed banks, so these failed banks account for 25% of the deposits in banks headquartered in the region, right? So this is a pretty big crisis, at least at the regional level, right? So I'm not the first to look into the failure of Banco de Cataluña. So there's been a historical debate about this in Spain. Essentially, it has been there's two positions, right? On the one hand, you have people arguing that the bank, Banco de Cataluña, was a solvent bank that was targeted by Republican authorities for political reasons. On the other hand, you have another side of the argument, which is arguing that the bank had dubious assets and that there was no specific bias against the bank, so it failed because of the dubious assets, right? However, in both cases, there is no role for the Great Depression. And importantly, since the 80s and the 60s in which these papers were written, there has been little progress in advancing on the cases of this, right? So this is where my paper joins this historiography. This has also implications for the international historiography, right? Until very recently, the 1931 banking crisis in Spain is not even considered a crisis. This has changed recently. But another important thing is that usually the Banco de España is presented as an unconstrained lender of last resort, right? So the idea that because Spain operates a non-convertible currency is traditionally associated with the idea that lending freely or lending widely to the banking sector was possible, right? Whereas this is not the case, depending on it ultimately depends on collateral, right? On what are you lending against. So what do I do in the paper is I bring new archival evidence that reveals key ignored facts that I think are crucial to understand the crisis. I put the focus on the monetary regime, the institutional design, and the international context in which this crisis happens. And my argument is in a nutshell the following. So I show how politicians and bankers and Primo de Rivera, dictator, they formed this coalition to kind of bypass the central bank collateral framework. Okay, so to escape from the restrictions that this collateral framework imposed, and then this leads to moral hazard, which materializes in risk-taking and insider lending, and then is the transition to democracy, so the end of the dictatorship, that brings about an end to these previous coalitions. The safety net provided by the dictator disappears, and then the Great Depression brings in liquidity and solvency problems, and finally Republican authorities allow the bank to fail. So this is going to be the argument. I will rely on a structural narrative approach. If you've read the paper, this is obvious already, but just so you know, this is the approach the paper takes. Okay, so this is the new archival evidence, comes from a variety of different archives over the last years. I'm going to skip this in the sake of time, but we can discuss this a bit later. So let me talk about the formation of these coalitions, the rationale and the fragility and the consequences of these coalitions. So in 1921, there is this banking law in Spain which defines what I call the overarching bargain. Okay, this is an agreement between the central bank, the government, and the banking sector, and it kind of defines the collateral framework. This means that it obliges Banco de España to lend against public debt to Spanish banks, but it allows the bank to retain discretion in all other operations, right? So in pre-discount, very importantly, in the provision of liquidity on foreign bills of exchange and on shares and bonds. The idea here is that Banco de España is protected from exchange rate risk, and this risk is left to be taken by foreign banks operating in Spain, essentially in Barcelona, which is where they are operating more intensively. Effectively, this framework has the effect of defining the minimum conditions for constructive ambiguity, right? Because you know that if you accumulate public debt, you are safe, right? Because the central bank is forced to lend you against public debt, right? At the same time, this means that the central banking institutions have an inward bias, and the collateral framework doesn't cater for all types of banks. If you are an outward-oriented bank, then you have to find alternative sources of liquidity, right? So in this context, in 1928-29, a group of bankers joined the dictator to create a new bargain, or a new game of bank bargains within this overarching bargain, which is the creation of Banco Exterior de España, BEX, which is a state-backed export-import bank. Okay, it has two goals. One is to improve the balance of payments and reaching and help reach exchange rate stability, which is dragging on the reputation of the dictatorship. The second goal is to compete with foreign banks, right? Because they are the ones who are providing funding for international trade credit. So the role is to compete. The second goal is to compete with foreign banks in Barcelona mainly. In short, this means that BEX is going to take on central banking functions, right? It's going to accept and rediscount bills originated in international trade, is going to borrow and lend in foreign exchange. So in other words, it's going to do what the collateral framework of Banco de España doesn't do, right? So it's going to provide these credit facilities to banks in need of these facilities, right? The problem is that this state-backed bank, BEX, is fragile by design, right? Quoting Calomiris and Haber. It has two main sources of fragility. The first one is purely financial, because Banco de España is not going to accept any exchange rate risk, is not going to rediscount paper to Banco Exterior, is not going to deem BEX eligible at its discount window, right? This means that BEX is not going to have a lender of last resort, is going to depend on an eventual fiscal backstop by the incumbent government, right? But more importantly, BEX is not going to be able to act as a lender of last resort, even if it's taking on central banking functions, right? And this is because it borrows in foreign exchange, it funds itself by borrowing in foreign exchange, but obviously it cannot just lend indefinitely or widely against foreign securities, right? So importantly, this is very different from what happens elsewhere in Europe or in the United States, for example, right? So in the UK, the US, or Germany, similar state-backed export agencies are created, but governments make sure that these agencies have access to the discount window of the central bank. And essentially, one big difference here is that in these countries, there is no disagreement over exchange rate policy, at least ex ante, right? Whereas in Spain, you have this limitation. The second source of fragility is governance, right? Because there is a very high risk for this bank, because it's obviously not going to be accepted at the discount window of Banco de España. This means that you need to compensate bankers to enter the coalition with the dictator and form this bank and manage the bank, right? So this means that you're going to end up in a very narrow coalition. The narrow coalition results in Banco de Cataluña directors managing Banco Exterior. So this state-backed bank is chartered to this very narrow group of bankers, right? So this is important. Banco Exterior and Banco de Cataluña, so will have the same directors, right? This allows them to create a rent, okay, and to extract a rent from this. So they essentially, what they do is they grant themselves a reduced rediscount rate for commercial paper, right? So then they can underprice the rest of banks, including foreign banks. Of course, the rest of banks are going to complain because they argue that this is unfair and so on. And of course, foreign banks are going to lose business in Spain because of that, right? So what is the effect of Banco de Cataluña being in charge of Banco Exterior? So here you have the growth of assets for different groups of banks, and the red line here is when Banco de Cataluña is granted with the management of Banco Exterior, right? So you can see that while pretty much everybody is growing, the growth of Banco de Cataluña, which is this gray line here, is unparalleled, right? So essentially the bank begins growing by expanding its commercial portfolio because it has this privileged access to Banco Exterior. This has an impact on foreign banks. Yes, you can see this is the market share of the largest foreign bank in Spain. So this is the Anglo-South American Bank, who is providing liquidity against international bills of exchange, bills on London, and so on. And you can see that this is when this Banco Exterior is created, market share for this bank collapses. Essentially, what Banco de Cataluña and Banco Exterior are doing is they are taking over the risk that foreign banks were taking in Spain because of the institutional design I explained before. Okay, more important than the speed or who are they taking business from is the shift in the portfolio composition of the bank, right? So in this chart you have a liquidity risk ratio. So this is essentially to the right is you're becoming less liquid in the eyes of Banco de España. So this is essentially a measure of how little public debt you have. And on the y-axis, you have growth. of these banks. So what you can see is essentially this constructive ambiguity regime in the making, right? So you have most banks in 1927 growing, some of them growing quite a lot, but everybody is going to the left in the sense that they are growing by accumulating public debt, right? And then you have Banco de Cataluña here, which grows much more, and it moves to the right quite a lot. So it becomes an outlier, right? This essentially means that this bank depends on the liquidity provided by Banco Exterior. Okay, it's not liquid in the eyes of Banco de España. Okay, so this is the rationale of the coalition. Why did this coalition emerge? Why was it fragile, and what were the consequences for the banks? Now, let me turn to why did this lead to bank failures. In the paper, I deal with other aspects of the crisis, but here I'm just going to focus in what I think is the main trigger. So in 1929, Banco de Cataluña directors and dictator Primo de Rivera, they joined to create a cork manufacturing and exporting trust. This is called Cogeco. And this is a very large company, which is founded on the 4th of November, 1929. So you can see there's not very good timing, but I will explain a bit later why. This is created by merging and incorporating this company, CIL, which is from a Belgian company, Compagnie Industrielle de Liège, and 17 other manufacturers, cork manufacturers across Europe. This turns Cogeco in the largest manufacturing trust in Europe, and is essentially created with the aspiration of competing with Armstrong Cork, which is the US cork giant. Okay, of course, because of the construction of this and the fostering of this creation of this fostering the creation of this company, BECS and Banco de Cataluña are going to be very exposed to this company, right? They are going to become shareholders and more importantly, large creditors to the company. The problem with this is where they purchased all the cork manufacturing companies during in November 1929. So it's essentially all across Europe. The timing of the purchase is obviously at least it would raise concerns, right? And there is suspicion raised among members of the board of Banco Exterior because the deal is closed without the approval of the board, because directors of Banco Exterior, who are the same people as directing Banco de Cataluña, have full discretion in closing all types of operations they want to close. They travel to Brussels, they close the agreement, and they come back to the board and say, look, we have done this, and you know, so of course there is a reaction from the board. Essentially because the reality of the deal is that this is not just a company, but this is a secret bailout for another bank called Banco Central, which is not a central bank. It's just called Banco Central. It's a private bank, a normal private bank, which had been already bailed out by the dictatorship in 1925. So this bank is very exposed to this company, CIL, which is not doing very well. And therefore, it enters in conversations with Banco de Cataluña and politicians and the dictator, and they sell, and this bank, Banco Central, sells this Belgian company to the recently created Spanish cork export trust, right? The problem with this is that when this operation is done, the company is already insolvent. So CIL was already insolvent by November 1929, and this is precisely why the operation is conducted, right? Is to bail out the bank that was very exposed to this company. So this is the share price of the company, which and this is the moment in which this is acquired. You know, if you read the Belgian press of the period, this company was widely regarded in financial circles as an insolvent company. Okay, so of course this relies on the backstop of the dictator, right? Because you have the precedent of 1925, and because the dictator gives his personal approval of the operation, But what is important about this is that within the board of Banco Exterior, there is one seat which is for Banco de España. And when Banco de España realizes this this operation and sees the nature of the operation, they explicitly warn over the quality of these assets. They complain and they disapprove the operation. And one thing they say is that it has to be explicitly written down in the minutes that they are saying this. So essentially what you have here is Banco de España positioning itself with regards to the liquidity provision to this type of company. Okay. So the consequence is that Banco Exterior grows very overexposed to cork. So this is the total lending by commercial, by commodity. And in blue, you have cork. I mean, cork was an important export in Spain, particularly for Catalonia, but it was not 30% of exports. It was the fourth largest export, right? So this is overexposed. The bank gets very overexposed. And as many commodities, cork didn't do very well, right? So this is 1929. This is the quantity of cork exports. This is the value of cork exports, and this is data for Spain. But of course, this is true for the rest of Europe. This is the moment in which the company Cogeco is created, and this is the evolution of cork prices and export quantities. So how does this lead to the failure? So in early 1930, when Primo de Rivera resigns and his Minister of Finance resign, there is an internal investigation. So this is January 1930. There is an internal investigation over solvency risk stemming from these insider lending operations. Right, members of the board that had flagged issues about this now begin to raise these issues even more because the implicit backstop of the dictatorship is gone. Right. So what you have is that this company, the Belgian CIL, which is the core of Cogeco Cork Trust, closed 1930 with losses amounting to 97% of its equity. So essentially, an insolvent company, and this represented 50% of Cogeco's total equity. Right. So Cogeco is also an insolvent company, you could say, right? Still, the company manages to keep borrowing from Banco Exterior, although it's even in increasingly more difficult conditions and in shorter maturities and so on. But the company begins to suffer liquidity pressure, but it still manages to get liquidity from Banco Exterior, and it survives, right? This lasts until the 25th of June. Okay, 25th of June, 1931, when the company announces that it will default on a coupon payment due on the 1st of July. Okay.
Enrique, sorry, you have 5 minutes.
Thank you, Paula. That it will default on a coupon payment due on the 1st of July. The implication of this is, first of all, that this is the moment in which the fragility of the system is revealed, right? The board of Banco Exterior, they essentially panic because they are state-backed banks. They lack commercial paper eligible at Banco de España, right? And so what they do is they contract credit. So instead of providing liquidity, right, even though they were acting as a central bank to an extent, they contract credit and they try to raise liquidity by just stopping rediscounts, right? And they say this very explicitly in the minutes. Okay. The main implication of this is that the main borrower from Banco Exterior suddenly runs out of liquidity, and this is Banco de Cataluña, right? So Banco de Cataluña suddenly finds itself back in the collateral framework from which it had managed to escape by running Banco Exterior, but without a portfolio that is eligible at Banco de España. So they still manage to borrow from Banco de España. So they borrow fairly large amounts that I explained in the paper against whatever eligible securities they have left. So some public debt, some securities, but this is very little amounts compared to the size of the bank, and then they have to resort to personal loans. So essentially, what happens here is that Banco de España sticks to this ambiguity, right? It doesn't risk, it doesn't lend against securities that had not been deemed eligible ex ante. Right, so the implication is the bank runs out of collateral, and then Republican authorities. I mean, there are negotiations between the Bank of Spain, Republican authorities, and the bank, but in the end, the Republican authorities deny a fiscal backstop to the bank, essentially arguing two things. One is technical problems as in the paper cannot be discounted at the Bank of Spain, and then what they call moral problems, which is essentially all the insider lending episodes I was documenting before, right? And so the result of this is that the bank had to close its doors on the 7th of July 1931. Okay, so this is the story. This is what I put together in the paper. Let me just now conclude. So the paper brings new evidence and new explanation for bank failures in Spain in 1931. There are many aspects of this crisis that I am not able to explore in the presentation, but also in the paper because of space restrictions, obviously. But I think my impression is that this complements quite a lot what we knew before. And essentially, what I find is supportive of the fragile by design theory of banking crisis, right? You have this disagreement over exchange rate policy in Spain. So nobody is willing to take on the risks that involve, or the costs that involve exchange rate stability. And therefore, this is going to influence central banking design. Central banking in the sense that it is going to affect the way in which some functions that are necessary for financial stability are performed, regardless of who is performing them, right? In particular, this is going to condition the collateral framework, right, compared to other countries. And this is going to open room to coalitions to kind of bypass this regime, right? So my point here is that the coalitions that emerge can be explained or can be rationalized by this inability of Spanish monetary and fiscal institutions to agree on who is going to bear the risk of providing credit against foreign securities, right, and foreign and international trade. But what I emphasize here is that it's the governance of this coalition, obviously, because it's between an authoritarian regime and unmonitored banker coalition, that it leads to risk-taking and insider lending, right? It leads to a huge exposure to insolvent firms on the eve of the Great Depression. And then is the Great Depression what really reveals solvency concerns, right? In the paper, I document the expectations of a bailout and I also explain the importance of the regime change and the stance of the Republican Minister of Finance regarding the bank, and so I provide more detail on that. But essentially, this is the main finding. And finally, I already said that, but my point here is that it's not that these coalitions don't make sense. Other countries created similar institutions, similar banks, similar state-backed export agencies. The problem is the governance of these institutions, right? So so I think I will leave it here, and thank everybody for your time and attention.
Thank you, Enrique, for this fantastic presentation and paper. So now we would like to welcome everyone to post questions. You can either raise your hands or type your questions in the chat, and I can read them out loud to Enrique if you would like. So, Enrique, before the others join in the conversation, I have a few questions for you, and we were talking earlier about whether the paper has this really nice framing of economic history and political economy, and in sorts of it needs the two, right, to work. But at the same time, sorry, and you mentioned that one of your colleagues wondered if you're really talking about coalitions or connections. I was wondering if you need to actually explore more the motivation of the regime to create the Banco Exterior, because you mentioned in the presentation, you mentioned in the paper, that it was about reputation, right? First, I would ask reputation regarding domestic constituencies, foreign constituencies. What is the role of reputation in an authoritarian regime? So I think that if you, and why reputation regarding exchange rates, right? Is this what people were paying attention at the time? What is the audience of this reputational economy? So I was thinking that if you explore more, even the role of coalitions in authoritarian regimes, you can then explain better what was the function of the Banco Exterior within the regime's attempt at surviving, right? Postponing its demise, because it's a fragile equilibrium. And the second question that I had for you is, what was the place of the Banco de España in this authoritarian regime? Because it seems to me that there was a very, there was a gamble there, because if Banco Exterior was to go through some problems, you would have to appeal eventually to Banco de España, but Banco de España had a lot of discretion to decide whether would provide this kind of support, right? And if you think of the Banco de Cataluña's directors, think they are bounded by the rationality, they would have factored in this gamble, right? That Banco de España could say no. So why would they think that Banco de España could say yes instead of no, which is the more risk-averse approach? And in the sense, again, if you think that they are bounded by rationality, making all these risky decisions, why would they assume that if the Banco de España would have said no, the government would provide fiscal backstop? Because I may have missed evidence in your paper of some sort of strong connection between the Banco de Cataluña directors and the regime to say no, because of this, because the Banco Exterior is so important, we won't let it fail. So this is kind of, I think, a missing piece, either because I missed it or because you could flesh it out more. And we got two more hands, so I was wondering, would like to hear Sergio's and Meili's comments, or you like to respond to mine?
Can I respond to yours first?
Yes, sure,
so I don't,
sure.
Because otherwise
Okay.
I tend to forget. So yeah, thanks. Thanks a lot for reading the paper and for the comments. Regarding the rationale for creating Banco Exterior is more than what I said here. First of all, is just like any other country in the interwar period trying to raise foreign exchange. Because this law from 1921 allows Banco de España to deny access to foreign exchange to the government if the bank doesn't agree on the terms of an intervention to stabilize the exchange rate. This means that you're out of power essentially to stabilize the exchange rate, right? And so there is a big discrepancy between the dictatorship's fiscal policy and what an exchange rate stability. Right, they have these parallel budgets. I mean, it's a very fiscal. There's a lot of fiscal expenditure, and there's widening current account deficits. So the reputation you are trying to, so what you're trying to do is to find an alternative way to raise foreign exchange and achieve the balance of payment stability. There is another role for Banco Exterior, which is fostering, this is according to the nationalistic rhetoric of the times, that you know, an approach to economic policy, which, you know, Primo de Rivera is very fond of. It's like reducing dependence on foreigners in generally, right? So and so the creation of this Cork company is in a way sold to the dictator like this: is we are going to nationalize, we are going to you know, purchase all these manufacturers of cork, because we are only exporting raw cork and we are not taking advantage of the whole chain of value. So let's and he buys into this idea. So one of the reasons of the creation of the bank is essentially reducing dependence, fostering exports, and achieving exchange rate stability. How important is reputation? I mean, for the dictatorship, or how much is Banco Exterior a solution or a device to try to postpone the demise of the dictatorship? I think it's so exchange rate played a big role. All the, you know, historians agree on that reputation of the dictatorship was really eroded by the fall of the peseta, basically because in 1926-27 they had kind of leveraged the reputation on that. 26-27 there were hot money inflows, the peseta skyrocketed suddenly, and then they kind of made this bet, like, this is just a confirmation of our policy by the whole world, everybody believes in our economic program. And then when capital flows start leaving the country in 1928-29, they really are kind of trapped in their own rhetoric, right? So I think this was trying to keep the reputation more for insiders than for foreigners. Yeah. Then one question that you asked, I think it's very important, is why did they think that Banco de España would say yes? In the paper, maybe I should make this, maybe this is in a footnote, I don't know, but in the paper I show how when the dictator resigns, insiders from Banco de Cataluña say, look, Banco de España, we don't know what they are going to do, right? So just get rid of everything, accumulate public debt and cash, because we don't really know what they are going to tell us. They might tell us yes, they might tell us no. It's important to highlight that the bank was already on the brink of failure in 1921, and Banco de España had already provided liquidity and so on. So, so they don't expect Banco de España to say yes. What they expect is, and this is what had happened in 1925, is for the government to issue a fiscal backstop. Right. This is what Primo de Rivera did in 1925 for this other bank, Banco Central, and they. And this is why they rely on this. So why? So the evidence for this, of course, this is I think one of the problems with this research or literature is that, you know, everything's very opaque, right, by definition. But in the paper, I document, you know, historians, and I document the personal connections and personal connections between the Minister of Finance and the dictatorship, and the dictator and these bankers. I also show that when the dictatorship ends, the Minister of Finance goes to become the director of the bank that he had bailed out twice during the crisis. And in fact, there are rumors that it's going to become the director or going to join the board of Banco de Cataluña, but then the stock market reacts to that, and then he finally, you know, doesn't go. So there is this, I think I have evidence for this kind of revolving doors, right? And I think this is I would say this is what I have. But I agree that you know, this is, I need to maybe to model the rationale a bit better. And finally, just very quickly, coalitions or connections is important. I use coalitions because I follow the framework of Calomiris and Haber. I think of coalitions as more of a structural phenomenon, and then connections happen within or across these coalitions. But in the end, I think it's about. I would say I'm kind of happy sticking to the Calomiris Haber framework for now. Yeah. Thanks a lot, Paula.
Thank you. Sergio?
So Enrique, thank you very much for your great paper and presentation.
Thank you.
I have a couple of questions. Perhaps you already clarify some points, so if you just like extending on those. So first, I was wondering that, well, the different like literature strands that you're talking to, you have these corporate governance strand. You mentioned this, the moral hazard, insider trading, and I was wondering, because from an academic standpoint, this literature began with the end of the century, 20th century crisis, and the dot-com, so sort of around there, these frauds. But then in regulation, you can look back into the Great Depression. As a result of the Great Depression, these the reduction of information asymmetries through the publication of information and transparencies and all these things. So related to that, how you're reconciling or connecting this new framework of analysis of corporate governance with your historical narrative in a time where, well, these things might not have matter as much as now, or were handled in a different way. Or perhaps the question is, how was the point of view of the people from that time dealing with these corporate governance issues? That one on the one hand. On the other, I was wondering, you mentioned this a bit, and the connection between the politicians, the dictator, and the banks. Well, wondering two things. The first, what happened after the shock that you're analyzing. So whether these relationships just broke drastically, or were they more in a fuzzy transition, in the sense of, were there no more connections with the Bank of Spain, or was just at the high level, but then perhaps you have some other medium level agents still connected? So, and I was saying you already touched a bit on this, in the sense that you were mentioning these kind of networks, with led me to think whether you have perhaps, or in another paper, or in this one, thinking about this network analysis of the relations among these agents. And perhaps, I don't know if it's too simplistic, but summarizing this in a kind of map or figure on how they were connected before these specific people, agents, and after, and how perhaps there was this fuzzy or drastic transition to understand a bit better the shock, because you said this happens perhaps this bank more than in other. And I remember, I had an additional question related to, I don't know if you could expand more or exploit more within your paper this concept, the framework of constructive ambiguity, because I think perhaps it's something novel or kind of new. You say it's opaque, it's obscure, but perhaps this might be a concept that's worth exploiting even further. Yeah. So thank you very much, Enrique.
Enrique, before you reply to Sergio's questions, perhaps we can take mailies. And you combine them, mailies.
Sure. Hi, Enrique.
Hey,
really nice to see you, and I really enjoyed the paper. So I have two questions. The first one was about the trying to find where was the original scene of this whole millefeuille, layers of in the trade corruption or connection that led to eventually the failure. And to me, I get a really bad move in the story. The way I understood it was when they went out to buy this Belgium company that seemed already bankrupt. And so I wanted to ask you maybe to provide a bit more explanation on why they did such a bad move, because when I looked at the graph of the share, the value of the share, they seem to be really buying something that's going to die. Yeah. And if you say that the liquidity was already poor, that seemed a really, really wrong decision. Yeah. Yeah. And so And they say, oh, it's because they wanted to have this core trust, but you say they buy 12 other companies. So would they really need this one failing Belgian bank to secure the core offer or like flows? That was my first question. And the second one is maybe more my ignorance of Spanish history, but you call the political regime the dictator, but then you say, oh, and then the dictator resigned, and I didn't know that the dictator can just resign. So maybe it's just a matter of forwarding, or maybe clarify if it was acknowledged as a dictator or just like an authoritarian regime, or just like a smaller question. Thanks.
Okay. Thank you very much. Okay, I'll start with Sergio's. Yeah, so contemporaries were in general, so if you read the press of the time and everything, everybody's a bit skeptical about the whole scheme of this, this bank, because it's growing very fast, it's growing suddenly as well, through these connections, So if I understand your question, is that this is probably how things were done back then, right? So it's a bit maybe anachronic to try to kind of evaluate this on modern standards. So my point is more than that. I am trying to explain the crisis. So maybe I should focus more on the economic history dimension of this, and because there is, as you say, there's probably little insight you can really provide to the contemporary literature. So that's a point I take, and I will think about this. So then what happened after? So there are many things happening after. So the directors of the bank, one of them goes to jail because they kind of loot the bank before it fails. Then the Minister of Finance, once this bank has been allowed to fail, then puts one more member of the Minister of Finance in the board of the central bank, and then after that they approve access of this Banco Exterior to Banco de España. So the problem is identified and is kind of some sort of solved after that, if you want. And we are working with some colleagues here on the political implications of this failure as well. So this is something we need to look at. I agree with you. I should explain more the connections and perhaps visually. That's something I try to do, but I need to improve my skills on that front, because I'm really struggling to kind of put so many people and so many arrows. It doesn't look like a Sultan Posha shadow banking chart or something like that. So I think it's something I need to do. Yeah. And on the constructive ambiguity, so this has to do with something more fundamental of the money market in Spain. So in Spain, as opposed to other places, the central bank is only requiring 2 signatures to rediscount. This is good and bad. Good, well, it means that it's easier, or it's easier for the bank to reject buying commercial paper because there is no third counterparty signing the bill. So this is very different from what you have in London, in which, in principle, although counterparties matter, it's not only the collateral that matters, but in principle, when commercial paper reaches the central bank, it has been kind of screened by a third party. In Spain, you don't have these. And there are French money doctors coming in the late 1920s, early 30s to kind of reform and try to reform this, because trying to reform this would allow for, that's the argument, would allow for a better and more understandable rediscount policy, right? So this is why I argue that this is opaque, because if you have public debt, you know that up to that level you are liquid. From that level, it's a matter of who is signing the bill. Right. And, it might be a very good, well-renowned foreign counterparty, but it's foreign. And losses associated with this bill are in foreign exchange, for example. And nobody domestically has signed the bill. So I think this is why. But again, I should really try to explain this a bit more. So
and Enrique, if I may, just because I have a question exactly on this. So in France, actually, you had the dual system where you could either come with a 3-signature bill, or you could replace the third signature with a collateral.
Yeah, two and collateral.
And so was it done in Spain?
Yes. So on paper is 2 signatures or 1 with collateral.
Okay, so it's really
yeah. So
okay.
It's, I mean, yeah. So this is one thing. I deal with this in a different paper in which I talk about these money doctors coming to Spain. I mean, actually French money doctors and actually advocating for reforming this, right? The problem with this is that if you require the third signature, then I mean, the idea is that you will have a third counterparty signing these bills, and then it's the discretionary power of the central bank is much lower, right? Because, you know, and therefore, you know, they kind of stick to the 1921 banking law that allows them to just really, lend against public debt and retain full discretion on commercial paper. So, so another thing I need to do is,
Maybe just on that again, when you say that would be a loss of discretionary power for the central bank. I mean, in the other discount market, there is, I guess, like a private underwriter market where they do a first screening of papers, and then the central bank is just doing more the LLR traditional function, or just providing some liquidity against good collateral. So the way I understand what you say, that the Bank of Spain would be like providing the whole underwriting markets by themselves because there was no local bank recirculating.
No, what I mean is that yeah. So I see. Okay. No. So so the framework is so 2 signatures, right, or 1 signature and collateral. So my point is that if you add a third signature, then precisely because you have an external, you could say, underwriter or specialized underwriter that, you know, charges a fee for signing and so on and takes responsibility, right, on the liability chain of the bill, then the ability to discretionary reject bills from the Bank of Spain is reduced, right? Because there is a better screening, right, of the bill. So for the Bank of Spain is a better situation to be on a situation in which they are going only to lend against public debt, and they are sticking to this 2 signature policy on bills of exchange, right? So and I should explain this more, but this is negotiated in 1921, and you know the you know, making the discount policy clearer and more open and less opaque and so on. But in 1921, when this law is created, the bank has a very strong negotiating power, and the government has very little. So so there's, you know, there's a whole other paper on that. But I don't know if I'm answering to the question.
Just an additional question on top of that, what you're exactly saying. I don't know if this paper or that's another paper, but here you can see also a paper about central banking and the role of the central bank as lender of last resort connected to financial stability. So I don't know if you have perhaps too much intertwining, interacting, and there might be more than just one paper.
No, yeah, absolutely, yeah.
Even though it's greatly written and it's very easy to follow, but just thinking of that there still might be too much going on around.
Yeah.
Perhaps papers, I don't know.
So I understand there are lots of things that I am saying and I am referring to, and you kind of have to kind of take, but are not very explained in the paper. So I need to write a paper for that. Can I briefly answer my list questions?
Okay, sure. Can I just finish on the central bank discount policy and then I promise I stop? But I guess you should write a book about Spain Great Depression, so you have everything gathered and we're all clear on what happened in Spain. Yes. But I guess my last point on the discount policy is that it's not because you decide to add a signature that you lose discretionary power, because what you do is that central banks would monitor the underwriter instead of monitoring the second signature. And so what you monitor their claim, and you monitor their indebtedness and their exposure to different claims and how heavily leveraged they are. So it's a different type of discretionary power, but it doesn't. I have difficulty grasping why you feel like the bank would lose power to discriminate.
No, but yeah. So so there's something I might not have mentioned. This would imply that the central bank is exposed to foreign exchange losses. Because if you open for a third-party screening, then you widen your eligibility criteria, and then you're going to have to intake foreign bills. And one of the things that the bank makes sure in 1921 is that its gold reserve is completely disconnected from its lending, so it's not at risk, right? So it's not. Yeah, I think you. I mean, I agree with what you're saying. You have more control of the money market. Obviously, it's easier, for you to monitor and so on. But it's exposing your foreign exchange reserve. So what this banking law did is actually prevent or isolate the bank from any exchange rate risk. And precise, yeah. But this is like, no, I thank you for these questions, because this is the paper that should go before that. Or according to
you should send me the paper. I will be super interested to read the paper too.
Okay, so and just finally, you asked for explanation on why did they buy this bankrupt company. So there is a story for that. So this is a very influential politician that meets with the banker that is in trouble, and the banker that is in trouble asks for a favor, and this favor is creating this company to absorb the assets from the bank. So it's a bailout. It's a secret bailout, right? And then the politician that kind of does this favor becomes the president of this cork company. So this is why they do that. It's a
Spanish bank exposed to the Belgium risk.
Yes,
it goes to the government and says, please buy the Belgium risk so I can write off the losses from my Spanish balance sheet, something like that.
Yes, that's it. Yes,
okay.
yes. It's a bank that ends up exposed to this Belgian company, and there's a story of being fooled by another investor that was dubious reputation and so on, but this is exactly how you defined it,
and no one realized that this was a systemic risk that arriving in the Spanish market because of this bad move. Were there like reflection?
Yes, but they had done this before.
So...
But they had done this before. In 1925, they had done an exactly very similar operation, and they had bailed out the bank with public money, and this was just the second time they were doing this. I mean, they realize this systemic risk, and this is why when I mean, if you read the press of the time and contemporaries, going back to Sergio's point, you can see that everybody's super suspicious about this company, right? In the press, and so everybody is really considering why, because this gigantic trust I showed you is organized in less than 2 months. So in less than 2 months, between September and November 1929, they organized the purchase of these 18 companies. So, a lot of people ask questions and so on. And then you mentioned, why did the dictator resign? Yeah, it's a resignation. Yeah, it was not ousted. So he kind of lost the support of the king and the army, and one of the reasons is his economic program failed, and there were other things. There were increasing demands for democracy and so on, and the depreciation of the exchange rate is a fundamental factor there. So another thing I'm trying to argue here is that depreciation of the exchange rate was good for some things, but it was really a problem for other things. Yeah.
Great, thank you, Enrique, and thank you all for coming.
Maybe it was good for democracy to have the declining interest rate if the dictator was out.
Come again?
Maybe it was good for democracy to have the declining interest rate if that meant that this guy would disappear.
Yes, exactly. That's another good thing. But yeah, okay. I take your point. But this problem went on, 1930, it continued to fall. It, wiped out several ministers of finance, and and you know, they had to introduce capital controls, so it was not that but yeah, it killed the dictatorship. Yeah, that's a good thing. Yeah.
So I think we can continue this conversation. I just want to say thank you to all who have come, and invite you to come to our next session on November 14th. We're gonna welcome Renato Rafael Amoroso, who will give us the paper, the European Investment Bank, an extraordinary intervention for the Mezzogiorno, 1958-1973. So thank you very much.